am Hannah Wallace and welcome to FinextraTV. Kindly calling into our virtual studio today to speak about banking as a service and embedded finance is Nigel Verdon from Railsbank. So Nigel, welcome back. It's good to have you on.
Thanks, Hannah. Good to see you again. It's on a yearly basis, I think.
Yes, it is indeed. Hopefully face-to-face next time. So yes, this is a really interesting topic and one that's going to be high to the discussion at Money 2020 because APIs and banking as a service has led to an abundance of new and exciting financial products and services, hasn't it, for those consumers. And Railsbank, I know, is an example of a platform for developing embedded financial products. So you're in a great position there, Nigel, to shed some light on the opportunities presented here, but maybe also some of the potential dilemmas, and we'll come to that in a bit. But could you kick things off by bringing us up to date? Where are we up to with banking as a service and embedded finance, and what have been the drivers and what continue to be the fuel for this, what we'll call a megatrend?
Yeah, so it's becoming a sort of a, as you say, a mega trend, which is just by the amount of venture capital funds that seem to be sending emails to all of us in the market at the moment. But it's true. One of the things it's hooked into is, I think, the zeitgeist of the consumer, because up till now the consumer has very much had a functional relationship with finance, where they go to their app, they look at their bank details, they send money, and it's very much around a function of finance rather than the experience of finance. And I think probably the easiest way to explain that is, I think our chief product officer, our chief commercial officer, John Hammond, has a great quote that says, "People don't buy car loans, they buy cars." And so the loan just happens to be part of the experience of buying a car. So where we see the real sort of mega trend in this, the future, is really that the embedded finance economy, as we call it, is a fundamentally different way of creating relationships between brands and consumers. And you're taking a brand that may touch a consumer, say, twice in their life at one extreme, Sing Life, for example, one of our customers. Life insurance policy, you buy it and then you die. And so there's 2 times you touch the insurance company, apart from if you've missed your payment, your premium. What they've done with embedded finance is then been able to create a special type of insurance contract that can have money deposited into it like a deposit account and spent with a card. So they now touch the customer every day instead of twice in their lifetime. And so they're using it for a different type of relationship, a more embedded, meaningful, direct, understanding, relevant relationship between the consumer and the actual brand providing the service. Mm-hmm. So that's an example with even just a finance company, financial services and insurance. You take that to the extreme where you talked about cars and car loans. Well, shouldn't the car come with a car loan built in? You just put it on the slider of when you buy the car. I need this amount and everything gets done for you in the background. So you make it a sort of frictionless experience within, say, the Mercedes car buying experience, and as opposed to popping out to a third-party specialist finance boutique type of thing, filling in forms, credit agreements and all that type of thing. Make it embedded. And it's the same way we've done with our credit card as a service business in the US. We've made it turnkey embedded. So if you have an existing brand and you want to have a credit relationship and a credit with your consumers, it should be totally on your terms, not have to sort of ping out into the Capital One app or the Capital One experience or the MBNA experience. It should be yours. And that's about embedded. It's empowering brands, it's empowering the consumer, and it's taking the shift away from functional to experience rather than trying to force it down it. And if you look at our industry, we're a bit sort of navel gazing. We talk about banking as a service, issuer processing, even embedded finance and things. But nobody wakes up in the morning saying, I'm going to go and buy some issuer processing, ever. They go, if you're an entrepreneur, you say, I want to do something with a debit card that my customers have this amazing neo-banking experience. And then you go and figure out, oh, I've got to go and buy some issuer processing in the back end. So the key thing is we're in an area now where the fundamental relationship between the consumer and the brand enabled by embedded finance actually changes. An exact example of this is Apple with the Apple Card. The Apple Card is powered behind the scenes by Goldman Sachs. And the card itself is now used all over the place in the customer experience of Apple, even non-Apple experiences of buying your groceries, but also Apple experiences in their own user journey. And so that's shown how we think the world is shifting to. And the Goldman Apple is very much a bespoke, like Savile Row product and solution. And the Marks and Spencer pret-a-porter type solution, that's where Railsbank fits in to power anybody to be able to do that.
Well, you've certainly brought us up to date. Thank you very much for setting the scene, some good examples, and I enjoyed the analogies weaved in there as well. So let's talk opportunities then. Let's touch on what some of the opportunities are and who's going to be reaping those benefits, but also where might there be some friction, confusion, or indeed pitfalls players need to be aware of, and maybe you could give us some advice going forward.
Sure, I think we're in the middle of some of the pitfalls because the finance industry, especially in the United States, for example, grew to like 6,000 or 7,000 banks and credit unions. It's a totally oversupplied market. Therefore, you've got subscale balance sheets, you've got subscale businesses. They deeply understand their customer bases, but they're very subscale in terms of banking. And you've got the same issue in quite a few Southeast Asian countries too. So the problem's already there, if you see what I mean. And what we need is, I think, more consolidation of balance sheet, and that balance sheet then distributed to the consumer at an appropriate and relevant time. So the opportunity is the relevant and appropriate time to distribute. I think the opportunity for the banking industry is some more consolidation and stronger balance sheets to that, because banks are extremely good at the business of balance sheets, which is asset liability management, and they're run pretty much safe businesses for many years, put Lehman's aside and put a few others aside. But Barclays has been around 150 years. ANZ, the great-great-grandfather, was a co-founder essentially over there, and that's been around for 150 years. So I think the opportunities are work with change. And the banking industry, I've just got off the phone with some equity analysts of one of the largest investment banks in the world, talked about their consumers. And apparently their customers are all terrified of these terrible fintech things. But I don't think they should be terrified of these fintech things. I think they should be terrified of the opportunity of restructuring the industry, like the music industry is restructured, to where the brand owns the relationship with the consumer, and to some extent the lot of the balance sheet becomes a warehousing type capability. And the smart banks, people like Goldman, SEB, Barclays, are moving to that way, to say, hey, we can warehouse risk and others can originate it from us for 1/100th of the price. Mm-hmm. And so the economics of banking start changing to be better for the bank as well. And but there's a lot of people whose jobs rely on bank branches and traditional infrastructure, so there's this inertia to change. But the consumer will, I think, like everything, drive that change.
All right, so watch this space, it's safe to say, Nigel, and it sounds like Railsbank are fully involved as well. And I know you've been very busy in the lead up to Money 2020 and got a very exciting announcement about a new partnership. So could you please share us the news, please?
Yes, we've got a new partnership with McLaren Formula One Racing. And if you go by the stand, you'll see, and if you're a Formula One fan, you'll see a very nice car sitting there on the stand, courtesy of McLaren. And this is, again, moving into what we call the fan base economy. There's fan bases at, say, Manchester City, Manchester United, McLaren Racing. McLaren also, the engineering side of McLaren, outside of racing, they do phenomenal medical engineering and things as well, exoskeletons. They've got fan bases all around the world. How do you engage with them other than television or advertising? Why not use finance and just a simple thing like a card? So if you take your McLaren card out, are you going to put that on the table next to somebody with a Monzo card? What's going to get more talk? In the early days, Monzo cards got all the talk because it was a great colour and it was a great product, still a great product. If you put your McLaren car down, that changes the dialogue with your friends at the bar and things. So you can see how the engagement, and it's coming back to embedded finance economy, or that is sort of like a different way of brands and consumers having a relationship together and driving things forward for something that is a massive fan base that's global, rather than turning up to events where you can, there's only X number of Formula One races per year. And Formula E and other things, but it's quite exclusive. You can suddenly make McLaren inclusive as well as being exclusive. So you can include everybody, but the people with the top end are able to visit the pits and the pit stops and everything and the stands. That's a great way of engaging.
Well, I urge those attending the event to go check out the stand and the car, especially those car fans. And an exciting partnership indeed. But Nigel, we'll leave it there. Look forward to catching up further down the line, hopefully face to face. But for now, we'll leave it there. Thank you very much.
Thank you, Hannah.